Hey there, Joe DiSanto here. Thanks for joining me again in the old YouTube channel. I'm going to talk a little bit about what small businesses should be doing towards the end of the year, just to prep for the end of the year, think about taxes, and also like maybe what goals they should be setting. To answer this question, it does depend a little bit on the size of the business. So I'm going to focus a little bit more on like the single owner kind of consulting corp thing. Uh, you know, a lot of what you're doing towards the end of the year is tax planning. So you're thinking about not only like what did the business make and what were the deductions, but how is that going to translate into my personal tax return in terms of my overall tax due? And are there any things that I can do, in that system of money entering business, money and then, net result ending up in my personal checking account, is there anything I can do to tax plan and reduce my tax liability there? Some things you could think about are like what your deductions, making sure that you're taking advantage of all the deductions that you can. If you're an independent kind of single person corp, you want to make sure that you take advantage of the home office deduction if you're uh, running the business out of your home. If you're using your car, you want to take advantage of that. Anything related to the business. But also, if you are, whether you're incorporated, have an LLC, or just Schedule C, you should consider doing a solo 401k, which is a really great vehicle to put money away in retirement and get a big tax savings today. So if you have a big net income for yourself and you have the extra money to put away into a tax deferred plan, the solo 401k will allow you, I think, as an individual person, over $60,000 to put into a tax deferred account in a single year. If you work with a spouse, your spouse can also participate in the plan, and you could each put in over $60,000 in a year. So that's a really valuable tax planning tool to take a look at. Now, in terms of preparing to get your taxes done, once the end of the year comes, you're going to want to get your CPA, your profit and loss, and your balance sheet. Most CPAs can do their work based on that. Your profit and loss will show all of your income and all of your expense, so that will help them prepare the return from that point of view. And then your balance sheet obviously shows not only what money you had in the accounts at the beginning of the year, but what money you have in the accounts now. Through kind of de facto calculation, it'll show what your distributions were for the year. Ultimately, you don't need to like know how to really read that perfectly to get your CPA what they need, but you should be able to read your own P&L and balance sheet FYI. So if you can't, you probably want to educate yourself on what is all going on there. But getting that information to your CPA should be easy, which means you should have been doing bookkeeping all through the year. Not only is that important for making your year-end tax prep easy, but it is incredibly important for showing you throughout the year how well or not well your business is doing, and allows you to make good data-based decisions about what you do going forward with your business. And I'll kind of wrap this up on the concept that, especially if you're like a single member consulting thing, your financial life really begins on the money going into your business and it ends on what ends up in your savings account after you've paid taxes. That's the whole system of money. And you need to be tracking not only what happens in the business portion, but you want to also track what happens in the personal portion and know that ultimately all the work you did netted in some amount of savings that you're now going to invest for your retirement, and that is going to be making money for you while you're doing your day job. You also really want to know that what you're getting into that savings account is enough to build the nest egg you need, eventually for your retirement. So if you haven't done the math to figure that out, if you don't know what the answer to that kind of question / statement I just made is, you haven't done enough work. You really need to do the math and figure that out. There are ways to do it. It's not that complicated. I actually even sell a course that will help you do that. It's called the Financial Independence Roadmap. But the degree to which you are prepared to get your Financials to your CPA at the end of the year is a good indicator to how well or not well you are managing and running your business. It should be pretty quick and easy, leaving just really a few basic questions, for the CPA to interact on. Okay, hope that's helpful. Probably it's going to make you think you have a bunch of work to do, so sorry about that, but it's work worth doing. I'll talk to you in the next video. Bye.